a lot of the consumer sectors. We here on CNBC-TV18 have been speaking to consumption sector leaders across the board, be it biscuits, aerated beverages, dairy, and even namkeen and snacks. So let's start continuing our conversation around the consumption space itself. Rigan Raithatha, who is joining in from Gopal Snacks as the CFO, joins in, and our discussion obviously will be centered on the three important points. One, the impact of GST cuts on snacks, and more importantly, the challenges in passing them to the consumer, capacity expansion via third-party manufacturers and their own plants, and the outlook on raw material costs, as well as the current demand environment, as it were. Thanks a lot, Rigan, for joining in. You know, the obvious question, we had the management of BKG join in earlier. They expect an incremental 3 to 5% volume growth on account of the rate cuts that have come by. I suppose yours would be somewhere similar as well. But the bigger challenge now is passing these cuts on, because, you know, for players like you, where nearly 80% of your revenue comes in from 5 to 10 rupee packs, you can't immediately increase your volumes. So can you tell us about the incremental volumes that you will see, and by when will new stocks hit the market earliest?
Yeah, so good afternoon, Mangalam. So yes, we are also definitely, like our Vikaji said, we are also expecting the increase in the volume, and our 70% of the sales comes from around 5 rupees SKU. So over there, we would be targeting to probably increase in the grammage, and in the high rupees packet, we would be the mixture of both the things. It would be lower of the prices and also increase of the grammage.
Right. How much increase in volumes will you see? And by when will the newer packs come to the market? Because some believe that September 22nd is very small a window for all the companies to go ahead and bring out all those new stocks in the market.
See, definitely, as far as volume is concerned, yes, we would be expecting somewhere around 5 to 6% of a volume growth. And 22nd of September, yes, it's a definitely very short window, because there will be some stocks lying at the dealers level. There will be some lying with the various MT and the quick commerce kind of a channels. So we would be coming out with the fresh packets probably once we have a clarity on the things like how much dealer stocks, whether we would require to do anything on that front. And probably we are targeting to somewhere by the end of this month, we should have proper clarity on that area.
Okay. All right. Just wanted to, get a sense in terms of the entire demand picture for the year. Q1 was weak. You have this GST consumption boost. Are you now assuming that maybe the remaining 3 quarters or the second half of the year is going to be much better than what was earlier anticipated? What is your overall guidance in terms of volume, revenue growth, profitability, margins? What can you guide us for in the remaining part of the fiscal?
Yeah, so definitely the GST rate cut is another legs up to this consumption story, along with whatever government has done in last few months, whether it is a tax rate reduction or the interest rate cut. So all this has definitely boosted up the more money available to the consumer, and also consumer space will have that additional volume growth coming in. So as a full year, as per our earlier guidance, we stick to that guidance currently. We are targeting 15 to 20% from the baseline of last year as a revenue growth, and we stick to that. Now we would be chasing on the higher end percentage rather than the lower end percentage of that thing. And as far as margin guidance is concerned, we would be targeting an EBITDA growth of in absolute value of around 20 to 25% kind of a thing.
Okay, 20 to 25% is the overall EBITDA growth in absolute terms that we're watching out for, and top line growth you're maintaining at 18 to 20% is what you're saying for FY26, right? And despite that boost and festive season coming in, you don't think this could lead to a better growth rate, given that, there is some fillip coming in, there's good monsoons as well for the consumption side, and this GST boost. You don't think that you could do slightly better than that?
No, so it would be better, but we would like to take this as and when it comes, because our Q1 numbers were slightly subdued on account of our internal supply chain issues. So on the full year basis, we maintain the guidance of 18 to 20%.
And do you think in terms of packs also which you are selling, so smaller SKUs, maybe that would see a more boost coming in, or what is the understanding right now you're picking up here?
See, in terms of packages, yes, smaller packages or the higher package, everywhere boost would come in because the rural demand was obviously not much of an issue. There was a urban demand which was little bit on slowdown. So we expect much more demand coming in from the higher packs where the urban consumption story lies.
Okay, so you're seeing some kind of incremental move in terms of the urban demand. Just before that, you had come out with some news with regards to the distribution changes, your third-party agreements in Karnataka and Uttarakhand. Just give us a sense in terms of what that means for business for you.
Yeah, so we have entered into 2 long-term agreements. So one is based at Hiriyur location, that is part of Karnataka. And another one is at Kashipur, that is in Uttarakhand. So both these agreements are part of our long-term strategy to have a deeper penetration in southern India as well as deeper penetration in UP, where currently our sales mix is around 4%. So both the plants would definitely help us in terms of increasing our sales over there and also the timing or the lead time to reduce the lead time by around 50% in both these areas.
Right. You said that you maintain your 18% revenue growth and 25% EBITDA growth guidance for the year, right?
Right.
But that means that for the next 3 quarters, you'll have to grow upwards of 25%. 9% was the decline that we saw in the first quarter, and EBITDA was all but negative. It was 63% lower, all 15 crores. So you think you will be able to do that, or would that fall short of expectations?
No. So, see, we had the major fire incident at our Rajkot factory in December. So, in June quarter, our numbers were subdued mainly on account of that supply chain issues that we were facing. And now, since we would be commissioning our Modasa facility by the end of this month, so we are expecting the supply chain issue to be resolving, and that should lead up to betterment of our revenue and also now GST rate coming in. So, this is an added advantage for us.
All right. And how much is the revenue potential of your Modasa facility and these third-party plants that you've tied up with? Together, what is the incremental revenue potential? So
there's incremental revenue potential for the Karnataka plant. It is roughly around 90 crores. And for the Uttarakhand, it is around 100 crore rupees.
And Modasa?
So Modasa is not an incremental. So it's...
Yeah, I mean, the plant by itself, how much can that contribute?
So... see, it would be around 700 to 800 crores, but it is not incremental capacity. That is what I want to clarify. So it's an replacement of Rajkot, what was capacity. So 60% is at Modasa and balance 40% would be restored at Rajkot.
Okay, just quickly before we let you go, I know Q1 had some exceptionals, but what is a normalized margin state for you all for the remaining part of the fiscal?
See, gross margin that should be normalized for this year. That is, we are expecting somewhere around 25 to 26% as per current raw material prices.
All right. And volume growth for this year would be how much?
Volume growth should be around, we are expecting 4 to 5%.
Okay. All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Gopal Snacks. The stock is up around 1-odd%. They're sticking to their revenue guidance of 18 to 20% in terms of revenue growth. For FY26, they do see the GST rationalization definitely coming in as a boost in terms of their sales. We'll take a short break, but up next, we'll get you more in the markets and we'll focus on our segment, movers and shakers, which will get you the top stocks which are moving at this time. Stay tuned.